Good afternoon. It's Brian Shannon from AlphaTrends.net. Today is Monday, the 29th of November, 2010, and we had a positive close today. You can see the market volume picked back up after the holiday shortened activity last week, and the market did come down and test that rising 50-day moving average, looking at the SPY. I've been kind of hoping that maybe we would cut down through and make a lower low, but the lows did hold for now above, the October lows, that is. And looking at this 30-minute time frame of the SPY, we're really kind of more neutral in here than anything until we get back above about 120.35. It's just kind of back and forth. You can see we're up to that 5-day moving average, but there's really no clear direction here, just a pretty choppy mess. So if we can get back above 120.35, 120.40 or so, then I think the next leg of the SPY will be higher. Until then, there's a lot of great bullish activity in some of the individual names, and the Nasdaq continues to hold well above its 50-day moving average, which is rising up to meet it. We have 10 and 20-day moving averages that have crossed here in the last week or so, and that's just showing a little bit of consolidation more through time. You could make a you could make a positive case for this market by looking at the semiconductors, which continue to hold up really well. Or if you wanted to be negative, I suppose you could look at the financials and say that that failed breakout has led to more weakness. But we are holding some support in the financials. 1425 or so is really the more important level there, and we finally at least broken this downtrend line. Now, a downtrend line break doesn't mean a reversal, but at least maybe the worst of the bleeding is over for the financials for now, as this pattern of lower highs and lower lows we still have intact. So what we want to see is maybe a little bit of strength. I wouldn't chase any strength in these financials, but if we pull back and made a higher low and that 5-day moving average flattened out, maybe you get a little bit of a bounce in there, but they're really more neutral than anything. I don't really see any real reason to be involved. So the market a little bit, continues to digest the gains of the last, from mid-August, and right now I still think with a rising 50-day moving average that the market is innocent till proven guilty. Today was actually an interesting day because, we talk about the volume-weighted average price a lot here. On the SPY, you can see it crossed back and forth above and below that level quite a few times today, and nothing happened. Whereas if you look at the the E-mini futures, the market was touching that volume-weighted average price almost precisely, had a pattern of higher lows coming up to that level, and had pointed on Twitter where it had broken right here and then had made it up to an important level from the overnight range, which was support and a little bit of resistance near that pivot. So the point I'm trying to make here is that I think when you see there's a large overnight range in the futures, or there's a gap, that you're better off looking at the volume weighted average price on a daily basis with the ES, that is the S&P 500 E-mini futures, rather than looking at the SPY, because you can see all that choppy action. Regardless, you could see that there was strength here in the SPY as well. So that'll do it for now.